Now to a David versus Goliath showdown. Amateur day traders at home on inexpensive apps taking down giant Wall Street hedge funds to the tune of billions of dollars. It is making the market crazy, driving up the price of a stock of a company you wouldn't expect and making some people a lot of money. Bottom line, it's a wild ride. And Rebecca Jarvis is here to break it all down for us. Good morning, Rebecca.
Good morning, Robin. It is wild, and we've seen lately these stories of ideas expressed on the internet, on social media, changing human behavior. And that is what happened in this story. After a stock tip was posted on a site followed primarily by millennial and Gen Z males, it ended up moving billions of dollars in the stock market.
This morning, the financial world in a frenzy.
Let's get to GameStop.
GameStop. This GameStop is really something we must talk about.
Shares of struggling video game retailer GameStop, which has closed more than 800 locations in the last 2 years, defying gravity. Up 1,700% this year, GameStop more than doubling yet again yesterday, thanks to a growing group of young, mostly male amateur day traders, taking on some of Wall Street's most powerful hedge funds in an epic David versus Goliath showdown. President Biden's team even asked about it Wednesday.
Our team is, of course, our economic team, including Secretary Yellen and others, are monitoring the situation.
The young speculators inspired by a community on Reddit called Wall Street Bets, followed by over 4 million readers. Post to Wall Street Bets recently exposed a serious exploitable vulnerability in GameStop stock. A number of influential Wall Street investors were heavily shorting it, which meant they were betting the stock would crash.
You borrow shares of the stock and you sell it. And if the price goes down, then you can buy it back at that lower price and pocket that difference. But if you're wrong and the shares go up, then you're going to have to buy back the stock at that higher price. And that difference is a loss for you. That's painful.
As it turns out, the Wall Street titans were wrong. Very wrong. 19-year-old JP Hurtado and others started buying, sending GameStop soaring.
When people see something going up, they're going to have a fear of missing out. And because more and more people keep hopping in, the price keeps going up.
JP, a student at the University of Illinois at Chicago who never traded a single stock until a year ago, bought about $8,000 of GameStop using the app Robinhood, and says by the close of Wednesday it was worth $82,000. With amateurs like him profiting, hedge fund titans have lost an estimated $5 billion.
This is uncharted territory, and it's a very interesting question as to what happens next. Certainly, there's no mechanism to make it stop immediately.
That is a big question for regulators. The SEC says they are monitoring the situation and the volatility. And the Robinhood app, this place where many of these young men are going to trade shares of companies like GameStop, just this morning announcing that they will no longer allow individuals to buy shares of companies like GameStop and AMC. The only thing you can do if you have a Robinhood account with these stocks in it is sell them. Robin?
And Rebecca, we were talking about this on the show yesterday. There are a lot of risk here with these people who are new to investing. They can lose a lot of money.
Well, first of all, Robin, we're setting up for a long conversation about what's happened here and how we move forward as a country around phenomena like this. The bottom line for investors is you have to remember that trading individual stocks is risky. It's like walking into a casino, Robin.